Hello, everybody, and welcome to the Trading with Ashley show. I rushed home from being out of town so that I could try to get this video out for all of you because I know that some of you are nervous about the market. We had a huge flush out on Friday, and I hope you were prepared. If you've been following me for a while, you were cashed up, ready to go, and you seized the opportunity. I know within my community, we were taking trades left and right as we had been waiting patiently for some great dip buys on some of our favorite stocks, and we had the cash ready to deploy. Now, I hope that none of you were caught up in this highly leveraged crypto washout, and that is the risk of being really highly leveraged. Now, I always like to share with my community members that I never like to use more than 30% margin because you want to control your trades. You do not want to be pushed out of a trade just because of shenanigans going on and something you can't control. You always want to be able to control your trades. So what I'm going to do, I'm going to take you through some key levels to watch for. Is it time? Is this flash crash over? If you look at futures, it looks like things are starting to bounce back, but there could be a little bit more volatility as we round out the week because we cannot control what happens with all these tensions going on with China. So it's a chess game and we are just watching it play out. Hopefully, though, if you're like me, you've got the cash ready to deploy in case it does dip again. You can get some incredible deals. I'm going to show you that how when I strike, when the volatility spikes and we hit key levels of support on the NASDAQ, on the Qs, I come out ahead every single time. So I think this time will be no different. And I already deployed some of the money, but didn't have a chance to, of course, tell all of you about it. But today I'm going to take you through a few key stocks. Now, I have a strategy when something like this happens. You know, we have stocks, Mag 7 stocks, that are already at bargain basement prices, in my opinion, if you're going to hold them long term. And so those are the stocks that I think I would be focused on because if there's further pressure on the stock market and if stocks pull down, the ones that are going to pull down the most are those that are riding at the top of their price life cycle, not those that are already beat up. Another thing that I'm going to do to make these trades a little bit more conservative, a little bit safer, we're going to leapfrog over the volatility in the rest of October. We're going to push towards the Christmas rally when we feel like things will be settled by then. So those two things, looking at quality companies that are profitable, that are already at a great price, and then taking it one step further and pushing our trades up a little bit further over all of the unknowns. Those things can help us still be very profitable in this environment. After all, when volatility spikes, selling options becomes a lot more fun and you are able to get a lot more money. Hey, and for those of you that had sold puts, and if you are worried about early assignment or if you're worried about assignment at all, if you chose a great strike price for the price life cycle that your stock is in, fear not. That is when the most money is made, when you are actually put the shares at a fair price and then you ride it up that Bollinger Band. So I don't want you to be afraid of assignment. Remember, selling puts and selling calls, that premium's tiny compared to getting assigned and actually letting the stock appreciate, and it takes you with it. All right, let's jump into the computer and let's see what we have in store for you this week. Let's get started with looking at the overall market, the NASDAQ. Now, the reason I focus so much on the NASDAQ is I use a lot of the stocks in the NASDAQ to sell puts on. So this is a massive red candle, and we felt it, right? We saw it happening real time. Now, I had been telling all of you that I was going to flesh out my position in the leaps or the Qs. I was going to finish my buying if we got down to some important moving averages. Well, let's take a look at them. It looks like we did absolutely get down to the 20-day moving average, and I sent out some alerts in my community, and I actually did purchase some more call options. I actually purchased skips at this level right here at the 20-day moving average. Now, the next moving average to watch is a very important one. It's right here. It's this 50-day moving average. It's in yellow. And if we flash down to this, right around that 583, 582 level, I am going to complete my buying of the leaps that I want to look at over the next 2 years. Now, as most of you know from watching earlier videos, anytime we get down to important moving averages and I actually purchase skips or leaps on the overall indexes, I do very well. This has been a very big part of my wealth building process, but I'm very blessed to have the cash at these moments because I've used other moments to cash up, and I want that for all of you. And so if we get, I'm going to be watching this level right here. And if you're in my community, I will definitely be watching with an eagle's eye, and I will be calling out these plays as it happens real time. Now let's go look at a few other stocks that I want to look at selling puts on. And I am going to, like I said, leapfrog over the volatile October months, maybe even November. We might go to December. Let's take a look at the first one. The first one is Meta. Now, I have done a few videos on Meta. I actually have some plays already out there on Meta that I'm just holding right now because they're at good levels of support. And so if you look at where we are in the price life cycle, we are 37 on the RSI. We're almost oversold at this point. Meta does have earnings coming up October 29th. And so I see that as a positive thing because we're going to get more premium by going over that October 29th date. Plus, it's already beat up pretty bad. And it looks like if we do have any kind of positive news on earnings, then this would take off up to the upside again. But before we decide to go ahead and make an investment in this, let's look at some key levels that we might be interested in selling a put at, and let's confirm that it is a profitable company. So let's look, since we're on this chart right now. You see right down here at 694, that's the bottom of the Bollinger Band. But you do see this 200-day moving average. If we have more pressure on this stock, it could definitely get there to the 200-day moving average. This would be the perfect entry if we're able to get it. So one thing I'm going to do, I'm going to look right here at the 670 mark. This is 669.92, close enough. I'm going to sell some puts at the 670 mark further out. And if we happen to flash down and get to this before my expiration date, I'm going to go ahead and add some more stocks to my position. But I might even purchase some skips and leaps if we get down to this level right here. Now let's make sure this is a profitable company. For that, I'm going to look at the analysis tab. Yes, absolutely. Meta is profitable. You can see right here, this is the revenue in blue, and this is the earnings in yellow. Also, this shows you how they continue to outperform on earnings. So we'll have to see what Q3 brings on October the 29th, but I am going to now go look at the amount of premium that I can get for looking at that 670 strike going out to December. Here we are on the Robinhood platform, and I have selected Meta Sell Put expiring on December the 19th. Now, if you go to the 670 level, that's where I wanted to pick this up because that's the all-important 200-day moving average. This is incredible. Look at this. If I sell the 670 strike on Meta, I will be paid $32 a share. That's $3,200. Now, keep in mind, you will have to have enough cash, or if you're using some margin, it will reduce the amount you need, but you will have to have enough for 100 shares to purchase this stock at the 670 strike. So this is obviously for larger accounts, but getting $3,200 for putting up the money to buy a quality, profitable company at a strong level of support, that is what makes option selling so incredibly profitable. So this is a trade that I will definitely be making, and I will be watching. If you're in my community, I will call it out when I make it. The next stock I want to review with you is one that is rapidly approaching the 200-day moving average. This is Amazon, and this was one that I have been very excited about, and I've been averaging into my positions for skips and leaps. So let's look right here. We are 40 on the RSI, and if you look at that 200-day moving average, it's right there at around that 215 level, and it is so close to that. So like I said, just a little bit more pressure, and it'll put it right there at the 200-day moving average. So I will go out to December, and I'm going to look to sell a put at 215. Let's go see how much we can get for that. Here we are at Robinhood again, sell put December the 19th. And here we are at 215. This is a great trade because we're already so close to the strike price I'm interested in that I can get elevated premium for that. I can get really good premium because I'm closer to the money. So if you were to sell the 215 strike, you would have to have available in cash or a combination of cash and margin $21,500. But for that, you are going to get $1,298. Now, this can change obviously on Monday or Tuesday. If we flash down and we get even closer or go below 215, then this will go higher. If we get further away from 215, then this will reduce. I'm not afraid of this strike price, even if we go under it. So if we happen to be fortunate enough to go under 215, I'm still going to stick with the 215 strike because I feel like it is that important on a profitable company. Speaking of, let's go double check the profitability and make sure we'd be comfortable holding Amazon longer term. If you look on the analysis tab, you can see right here, it is profitable. They have a lot of revenue and they have profit. Now, this profit could go up and it should go up as they continue to use AI for innovation and to reduce their overhead. I know they're cutting positions and they're looking at different ways to save money and become more profitable. So as you see this grow, then this stock will take off even more. They too have earnings coming up at the end of the month. So we leapfrogged over earnings and all the volatility, and that's what gave us such great premium. Now, I haven't forgotten about those of you that watch me that have smaller accounts and maybe you can't afford selling puts on Meta or Amazon. So let's look at going back to the NASDAQ and let's look at a potential put credit spread using the levels on the NASDAQ for those of you with smaller accounts. Well, as you know, we are looking right here. The safest trade would be right here under the 530 mark. This is the 200-day moving average. We were under that in April and we were trading under that, and that's when I took several plays. I don't believe we'll get back to that even with heightened pressure on the market. I think the most we can hope for is maybe getting right here to the 100-day moving average, and I don't think we would last there long. But for the sake of this trade, I am going to look at 560 and I'm going to go out to December for this trade. Okay, if you're doing this trade in Robinhood, here is how it works. First, I'm going with the sell put. I'm looking at December the 19th, and I am going to start at this 560 level. This is paying $11.93, and so this will be the opening part of the trade. But then I go up here and I click buy put because this is a credit spread, and this will not require as much money to put the trade on. For this part, I'm going down to 555 and I am going to buy this put. So when you put these two together, let me show you what it looks like. When you look at the credit, this will tell you the credit for this trade. So you take this $1 and you multiply it by 100. So you'll receive $100 to put this trade on. Well, how much will it take? Well, that's the distance between your two strike prices. You see the 560, if you subtract 555, that's going to require $500 to put this trade on. Well, if you look down here, you see that the max loss it's showing you is $3.99. Well, why is that? Well, because it's giving you this 101 credit. So that's the beauty of doing a put credit spread. You can only lose the distance between the two strikes minus the premium. So your risk on this trade is around 400 and the reward is about 100. Now you will have to wait a little bit later for this to play out if you want to take full advantage of it. But a lot of times what I like to do, if we do see a very strong bounce in the month of October and you see this dollar credit you received, once this trade whittles down to about 50 cents, if we've still got a couple of months on it, I'll go ahead and get out of the trade and then put on a new trade further out and higher up so that I can capture even more premium. But just like the others, if you are in my New Trader Network or if you are in my inner circle, I will call it out for all of you so that you can all take advantage of it. Okay, I cannot predict the future. I don't know what is going to happen, but I have shown you that I am prepared and we will take advantage of it if we get some more incredible entries on some of these quality stocks. Remember, if you're with me, Trading with Ashley, there is no trader left behind. I am working on some incredible emails for those of you that are part of my email community. I want to make sure you don't miss out on that. Sign up for my email list below so you can make sure to get all of my tips and tricks free in email. If you want to be a part of my community, the links are below for you to do that as well. And I cannot wait to work with you all this week.